Nick Verdi, who's currency strategist at Barclays Capital, joins us from Singapore. Nick, good to have you on the show. You know, we've seen the rupee close weaker in yesterday's session, but has still managed to close below 64 for 3 sessions in a row. Where do you see the new range stabilizing?
I think we are pretty stable here. I think dollar INR could probably move a bit lower. It seems as though Governor Rajan has had a very soothing impact on the rupee, providing a Draghi type effect. I think, as well as that, I think a couple of other factors have conspired to provide a conducive environment for rupee long. So the Syria situation is on the back burner for now as well. Global growth appears to be picking up. So this is a fairly good environment for the rupee. But I wouldn't take it too far. I think a lot of the structural issues that India has means that we won't be getting into the 50 to 55 range anytime soon.
Nick, Indian rupee has stabilized, it has managed to bounce back, but other emerging market currencies also have stabilized at the same time. So how much of stability or the bounce back in Indian rupee is a function of local factors and is a function of global factors?
I think a big part of it is global, but the real deciding factor, I would say, was domestic. So I think Governor Rajan has engendered a higher degree of credibility into Indian policy making now. Compare that to Indonesia, which has continued to underperform the wider region. I think going forward, in a world of higher global rates, higher volatility, I think emerging market currencies will have to work hard to convince investors to invest in them. And with India's issues, I think once we get out of a period that is very, very benign for risk appetite, I think people will be looking harder at India as to whether they should invest. And I think India will fall into the camp of those currencies that will struggle to appreciate in this new world.
Nick, to your mind, what really could be the new range for Indian currency for the second half of this calendar year? Will it be between 65 or 70, or will it be between 60 and 65?
I think 60 and 65 is more likely, and would be fairly positive in the context of the declines that we've seen of late. I think the worst of the EM sell-off is behind us, but as I was saying previously, I think for the INR, looking ahead, we could see some very bad data. I mean, I would love to see the August data. The big sell-off was in August, and the data that we're all talking about this week refers to July industrial production. So we really don't know what impact the weakness of the currency has had. We don't know what the impact of earlier tightening measures has had on the real economy. As well, sentiment has been hit. So all of these factors will take time to filter through into the economy. So I think any positive optimism that could be garnered on the back of this week's economic data could prove to be short-lived. It's not over yet.